Welcome to the deep dive. Today we're getting into something pretty significant happening over in India, specifically in that, co-living and student housing market.
Yeah, absolutely.
You flagged a really interesting report from FinTrek, and I think our mission today is basically to unpack this big acquisition involving Zolostays. What does it all mean?
Definitely. So, the headline news, right? Zolostays, big name in co-living rentals. They've sold off their student housing business
Okay.
to Good Host Spaces. And the number is RS 107.8 crore. It's a deal that, yeah, it definitely makes you sit up and take notice.
107.8 crore, and it's not just like a simple handover of cash, is it? The structure seems a bit specific.
That's right, yeah. The filings show it's a mix. Zolostays gets the bulk in cash, R 87.02 crore.
Right.
But then the rest, about R's 10.78 crore, that's coming through debentures issued by Good Host Spaces. Think of it like, well, like a loan note, basically.
Yeah. Okay, yeah, that helps clarify it. So let's quickly paint a picture of these two companies. Zolostays, we know them, co-living, home rentals. Selling this part off suggests a shift, maybe, focusing in.
It really does seem like it. The report hints they're doing this to, really double down on their core co-living stuff. Makes sense.
And Good Host Spaces, their angle seems much more specific.
Very specific. They do purpose-built student accommodation, but the key thing is it's within university campuses.
Ah, right, inside the campus gates.
Exactly. They've got tie-ups with places like Manipal University, OP Jindal, Shulini University. It's a really integrated model, almost like official partners.
That's interesting. And there's some important background on Good Host Spaces, too, isn't there? This isn't exactly their first big move recently.
No, not at all. You're right. The FinTrek report reminds us, back in October 2023, Alta Capital reportedly bought out 100% of Good Host Spaces.
From who?
From the big guys Goldman Sachs and Warburg Pincus. And that deal was valued at $320 million.
Wow, okay, so significant backing there.
Definitely. It sort of sets the stage for this current move, suggests they're well-funded and looking to grow.
Absolutely. It frames this acquisition as part of a bigger plan, which makes me wonder, what does it really signify when a company like Zolostays, which has raised a lot of money itself, decides to sell off a piece like this?
That's the million-dollar question, isn't it? Or, well, the 107.8 crore rupee question here.
Right. Okay, let's dig into Zolostays' side first. Why sell now? What's the stated reason?
Well, according to those filings, it really boils down to what we were just saying. Focus. Sharpening their efforts on the main business, co-living, rentals, and going after growth opportunities there.
Streamlining, essentially.
Pretty much. Getting leaner, maybe more efficient in their core areas.
And the immediate upside for Zolostays, that cash injection must be pretty helpful.
Oh, absolutely. Getting almost R's 97 crore in cash, that's going to seriously boost their liquidity, make their balance sheet look stronger. It gives them runway, flexibility.
Right. And it's interesting because even as they're selling this, they haven't stopped raising funds otherwise, have they?
No, that's another good point from the report. They recently pulled in another R's 20 crore, this time through non-convertible debentures.
So more debt, basically.
Yeah, essentially loans that won't turn into shares.
Yeah.
And that money is specifically tagged for, again, business expansion and just covering day-to-day working capital. Reinforces that focus on the core.
And just to remind ourselves, Zolostays isn't new to fundraising. They've got a history.
Yeah, a significant one. Over $110 million raised in total to date. Remember that big Series C round? $56 million. Led by InvestCorp and Murray Asset.
Right. Serious VCs backing them.
Definitely reflects investor confidence historically, even if the strategy's adjusting now.
And who are the main external shareholders calling the shots, or at least having a big say?
According to the credible data, which FinTracker cites, Nexus Ventures holds the biggest external stake, followed by InvestCorp and Murray Asset, those Series C leads. So yeah, major funds involved in this decision, you'd assume.
Okay. And how have they been doing financially before this sale? The report gave some numbers for FY24, right?
It did. For the year ending March 2024, revenue grew, actually, 11.4% year-on-year, hitting R's 204.4 crore.
That's not bad growth.
Not bad at all. And maybe more importantly, they managed to cut their losses quite a bit, down by 17.4% to R's 57 crore.
Still a loss, but moving in the right direction.
Exactly. FY25 numbers aren't out yet, obviously. But yeah, improving picture, yet they still decided to sell this student housing part. Suggests they see a better, perhaps clearer path forward, focusing just on co-living and rentals.
That's a really sharp point. Okay, let's flip over to Good Host Spaces. We know their model integrated, on campus. How does this acquisition fit into their strategy, especially after that massive Alta Capital buyout?
Well, if you connect the dots, the $320 million Alta acquisition and now this purchase, it really paints a picture of a company in like full-on expansion mode.
Right, using that capital.
Precisely. They've got the backing, and now they're making moves to consolidate and grow their footprint in student housing. It's aggressive.
The report mentioned an analyst's take on their success so far.
Yeah, it did. The quote was something like, they've stolen a march over competition.
Interesting phrase. How?
By being smart with funding, apparently, and crucially, by locking in those partnerships with universities that are themselves expanding, it highlights the strength of that focused on-campus model.
Which really underlines the difference here, doesn't it? Zolostays' sole business was managing accommodation for colleges, maybe some off-campus too, whereas Good Host is inside, purpose-built.
It's a fundamental difference. And FinTracker's analysis kind of leans into that. They suggest this whole deal might point towards the market favoring this captive campuses model.
Captive campuses, like the universities want this dedicated professional setup right there.
Possibly.
Yeah.
Maybe it offers more control, better quality assurance. I don't know. But it seems to be gaining traction.
Which then raises a practical question for our listeners to think about. How does Good Host Spaces actually absorb this new business? If Zolostays was managing properties for various colleges, maybe different types, different locations, that sounds operationally different from Good Host's current setup.
That's a huge point. Integration will be key. Are they going to run it as a separate division? Try to convert some properties to their model, selectively keep the best ones. It's not straightforward. Managing diverse, maybe off-campus properties is a different beast than purpose-built on-campus facilities.
Definitely something to watch. And what about the ripple effects? For the whole co-living and student housing scene in India, could this trigger more deals like this, more specialization?
It really could.
Yeah.
It might signal to investors and maybe even the universities themselves that this deeply embedded on-campus model is perhaps seen as more stable or desirable long-term.
So you might see other players deciding to focus, either go all in on campus partnerships like Good Host, or double down on the broader co-living off-campus rental market like Zolostays seems to be doing now.
Exactly. It could lead to clearer lanes, maybe more M&A activity as companies try to bulk up in their chosen niche. We could see more consolidation.
And thinking about Zolostays backers Nexus, InvestCorp, Mirai, why agree to sell to Good Host, was it just the money, that Nirha's 97 crore cash? Or did they also maybe see the writing on the wall that Good Host's model had, I don't know, a stronger long-term pull?
I suspect it's a bit of both. Look, the cash is obviously very attractive.
Yep.
It de-risks things, provides immediate capital. Hard to argue with that.
Sure.
But yeah, they might also have looked at Good Host's focused integrated model and thought, okay, maybe that's the most defensible, profitable way to do student housing specifically. It offers potential advantages, steady occupancy tied to the university, deeper partnerships, maybe even operational efficiencies.
Right, predictability.
Exactly, compared to maybe managing a more scattered portfolio.
Okay, so let's wrap up this deep dive. The big takeaway. Zolostays selling its college housing arm to Good Host Spaces for that Rs 107.8 crore mostly cash is a major event.
No doubt.
For Zolostays, it looks like a strategic refocus, sharpening the business, boosting the bank account to fuel their core co-living and rental ambitions.
And for Good Host Spaces, it's a clear power move. Using their backing to expand, really cementing themselves as a leader in that on-campus student accommodation niche. The cash involved shows they saw real value there.
And the broader signal, as FinTracker pointed out, is this potential nod towards the strength or maybe the growing preference for that dedicated, integrated on-campus housing model in India.
Absolutely. It certainly poses questions about where this market is headed.
Which brings us to that final thought for everyone listening. Given all this Good Host digging deeper into campuses, Zolostays concentrating elsewhere, what's next? What kind of innovations or shifts might we see in how student housing and, well, co-living more broadly evolve to really meet what students and young professionals in India actually need and want? It feels like this deal could be a real turning point.
Definitely one to keep an eye on. How these spaces adapt will be fascinating.
Thanks for digging into this one with us today.